Welcome all to this August Saturday morning session. I have with me here a wonderful speaker from the faculty group, Vishal. He's from Chennai. He's a chartered accountant and fellow member of the ICAI, and he completed his graduation from DG Vaishnav College. And he's a certified trainer, GST trainer certified by ICAI. He also has given several presentations on service tax, sales tax matters with NASIN, TNGST Staff Institute Training, and CP study Circle meetings at Chennai. He's also co-authored a book on amendments in finance bill for the 5 years. He's also co-authored book on bank audits. Uh, Apart from that, he is also involved in social activities and is a trustee at Mitra Seva Foundation. With this brief introduction, I hand over to Vishal. He's going to talk about a very contentious topic of input tax credit in special circumstances, 18.3 and 18.4. Welcome, Vishal, to this meeting, and I hand over to you.
Thank you, Soumya madam, for the brief introduction. First of all, I would like to thank this particular GST faculty group for giving this opportunity, especially Arup Das ji, who called me and actually said me directly that, sir, 5 तारीख को आपको session लेना है, बस मुझे कोई हाँ ना नहीं चाहिए. So that is where this is started. So let me go through the sections and then the corresponding rules, and we'll also take some 2-3 case studies to discuss how practically it happens. One second. Just give me 2 minutes. Arupji, just 2 minutes, huh?
Yes, Vishalji, no issues.
Why the presentation is not opening? So can I rejoin again?
Yes. That's what I am saying.
Yeah.
So participants, the speaker for today's session will join us again. Until then, let's have a brief discussion on the latest topic on GST Safari Retreat decision. And if anyone from our participants can share their views on the latest judgment and what they think about this judgment.
RPG, as you said, the government will very soon come with an amendment of that and or. But till the time the amendment comes, there will be a lot of business.
Yes, there will be a lot of business for the consultants and the advocates.
Yes.
And the entire entire gamut of what is a plant comes to the fore.
सर एक पूरा नया पैराडिम खड़ा कर दिया है लोगों ने. I mean, we were thinking that this will settle something, but बहुत कुछ unsettle हो गया इसके साथ आने के बाद.
Yes, what we were thinking for the last 6 years that this would be a path-breaking decision, but somewhere down the line, this is not one which we have got. And this is my personal view that the judgment has not been authored by the CGI and has been authored by other judges. If it could have been authored by CGI, we could have seen something else as well in detail.
And sir, I mean, it was reserved long back, and it took such a long time to come out with a detailed judgment. It was actually not worth the wait.
Yes, while going through the judgment, I thought that this is standing upon a very weak foundation. And once the foundation, the government itself has argued that this is, and the or should be read as and. So definitely they would be bringing an amendment in the next session on this.
So I don't know whether it will be fair, but somewhere there is an influence of the government on the judgment, it seems.
Yes, and if we understand also, because then the entire understanding of 17.5C and 17.5D would be having a different meaning. Wherein if I give a works contract for construction of a mall, I would not be eligible for ITC, but if I get individually services and goods, then I would be eligible for ITC. This is how I see 17.5C and D.
Sir, if I read the judgment, I mean, even like, for example, if I own my own office, I would rather own it myself and give out rent to my firm.
Yes.
And the entire purpose of buying the office was only giving out rent. So I'll still be eligible for ITC and save a lot of tax in the whole bargain.
Yes,
that's what the law, that's what the judgment comes out as. You know, if you're not the end user, if you're the interim user, then you get the benefit of the ITC. So the structuring will only change in that case.
Everyone would be happy to be a tenant.
Landlord.
Yes.
So, I mean, given this judgment was pending,
I'm really sorry.
Sorry, Vishal is back.
Yes.
Shall we start?
Yes, Vishal, yeah, you can take over. Yeah.
Host disabled participant screen sharing.
अभी कर दिया. देखिए.
ठीक है. Thank you.
Thank you.
Yes, everyone is able to see the slides?
Yes, Vishal.
Yeah.
Yes. So agenda for today's session for this 1 hour would be discussing section 18.3 and section 18.4 and the corresponding rule, which is rule 41, rule 41A and rule 44. And we will have some case studies in terms of how the calculation has to be done for the purpose of this 18.3 and 18.4. So first we'll start with section 18.3. 18.3 states that where there is any change in constitution of a registered person, which is on account of either sale, merger, demerger, amalgamation, transfer of business. So any of these 5 conditions and where there is a change in constitution of business, then there should also be a specific provision for transferring the liabilities. So this particular sentence gives us a view that this particular transfer has to be a going concern. Going concern in the sense all the assets and liabilities has to be transferred as such. And if that condition is satisfied, then this particular transaction of merger or sale or takeover, in this transaction, the registered person can transfer the unutilized ITC, which is available in his electronic credit ledger, to such transferee. So there is one transferor who has this particular chart is very much easy for us to understand. So there is a change in constitution of business, which is on account of sale, merger, demerger, amalgamation or transfer. So we'll come one by one. Sale is nothing but the whole business has been sold as such. Merger there are two companies in which one company has been taken over by the another company. That may be a merger, or there may be an amalgamation wherein both the company are resulted into a new company, a third company. Then there is a demerger. which is nothing but there is a company which is having two businesses and which wants to demerge one of the business to a new entity, and then there's a takeover of business or transfer of business. This transfer of business can be on account of maybe proprietorship to partnership business, maybe on account of death of the proprietor, which is given as per circular number 96, or any such instances of takeover or change in constitution of business. And if there is any change in constitution of business on account of these things, and if there is also a provision for transfer of liabilities, so all the assets and all the liabilities is being transferred of that particular business, then the transferor is allowed to transfer the unutilized ITC to the transferee. Now here the question is whether the whole business has to be transferred or even a part of the business can also be transferred. So now Reliance Industries Limited, example, is into various business activities. The particular one company is into various business, maybe oil also and telecom also, example. And this particular company wants to transfer only the telecom business. Now, whether this particular transaction is also a sale of business or not. So when we go into circular number 133 also, it says that partial transfer of business will also be treated as transfer of business. And therefore, any unutilized ITC, which is in regards to the transferred asset, that amount has to be transferred. That amount, that ITC proportionate has to be transferred. I think so. Up to here, everything is clear. Is there any discussion which we can make on these points? We can take then and there itself.
Hi, good morning. There is one point you said that there should be transfer of all assets and all liabilities.
Yes.
For the particular business, maybe fully or part of the business. But to my mind, if the key assets and liabilities are transferred and entirely the assets are not transferred, I think still this condition gets satisfied to my mind.
Sir, but now if you see, we don't have any definition of merger, demerger or amalgamation in the law. So we will be taking the principles from the other law. And if let us suppose we have a merger or demerger which is approved by NCLT, and in that if you say that there are only specific assets or specific liabilities transferred, then I think so this particular condition is satisfied. But if you say that I want to choose only between good assets and not choose between the bad assets, then how the takeover happens?
Vishal, can you say
Others can
that
also throw some
if
light.
the segment is transferred, then this will apply? Because like as you gave example of Reliance of telecom and retail or oil, and you will be transferring telecom. So all assets related to telecom are transferred, then this scheme can be applicable, made applicable. Is it
Yeah,
true to say
it's an undertaking. No, in that case, it becomes a division or undertaking which is being sold.
Gaurav, actually, I could not hear you because of your voice was very less.
Oh, excellent. So what I'm saying is that here, am I audible now?
Yes.
Yeah. So what I'm saying is in the case of undertaking also, if the undertaking is sold, then in that case also it can be considered to be a transfer of business concern as going.
No, but the question was here that in a transfer, if let us suppose there are 10 assets and in that 10 assets, only 8 assets are transferred.
Yeah.
That is the question. Now, still whether it will be treated as sale or transfer or takeover.
Sir, I also have a simple query. Can I just ask?
Yeah.
Please, sir. Please.
Yeah. See, I'm just like we have a case very similar to what is happening at Air India right now, where like these guys transferred the business, but without transferring significant portion of liabilities. So for all practical purpose, all assets were transferred, but not all the liabilities. So would that also come under this category?
But the section actually says that there should be a specific provision for transferring the liabilities also.
Does it include only operating liabilities or also financial liabilities? Because I am under the impression that something to do with the business, yes, but financial liability, technically, we can probably argue that it is not directly relation to the business itself. It can be in which way. Again, I can be wrong, but these are my 2 cents.
So your query is nothing but there are some loans which has been taken by the company and there are sundry creditors. So sundry creditors are transferred to the new company. The loans are not transferred.
Yes, sir. Absolutely, yes.
Yes, but in my view, the loans are also taken only for the purpose of business, no, sir.
No, I agree, sir. My point is, in that case, can we still go about arguing that this provision is applicable, as in it is only transfer of business?
No, here the more question would be the transfer of credit. Have you availed the transfer of credit?
That is where we are stuck right now. Should we or should we not?
No, if you are transferring the credit, then you have to transfer all assets and liabilities. That is binding. That's given in the act and also the rules. So,
The bigger question would be that if it does not constitute as transfer in terms of a particular thing, then GST will be payable on all the assets individual wise on individual rate basis, basically. You'll end up into a bigger issue rather than the
I agree.
thing.
I agree.
Arupji,
Arpitji boli.
yes. Let's take 18 subsection 3 and schedule 2 para 4 together.
Yes.
Because in that case, we would be able to understand, because 18.3 speaks about transfer of credit along with the transfer of business.
Yes.
And schedule 2 para 4 speaks about transfer of business as a going concern with not being treated as a supplier. So Vishalji, I would take some leave and share that screen.
Yes, please, sir.
Arupji, if you can make me the host.
Up the host already.
No, I have joined from another ID also.
Oh, अच्छा एक मिनट अच्छा वो कौन सा आइडिया फिर तो ढूंढना पड़ेगा अच्छा I got it करता हूँ कर दिया
ठीक है ओके So if we go through schedule 2 para 4, transfer of business of assets, the business is transferred as a going concern to another person. Where para 4C, where any person ceases to be a taxable person, any goods forming part of the assets of any business carried on by him shall be deemed to be supplied by him in the course of furtherance of business immediately before he ceases to be a taxable person, unless the business is transferred as a going concern to another person. So now the question is that when we go through 18.3, there is a specific provision of transfer of liabilities. But when we go through para 4, subclause C, subpara 1, there is no condition of transfer of liabilities. They have only stated that business should be transferred as going concern. So, in my opinion, when we read through 18.3, if we have to transfer the ITC, transfer of liabilities is paramount related to the assets which have been transferred, and they should be treated as one business. But in schedule 2 para 4, if the business is transferred as a going concern, and what is a going concern? That whatever transfer has happened, the business should be run as it was run prior to transfer. So in that case, even if liabilities are not transferred, then in such case, somewhere down the line, we can claim the benefit of schedule 2 para 4 clause C.
Sir, anyways, this is on the output taxation point which you are trying to say. Maybe the transfer is not at all a supply.
Yes.
But for the purpose of transfer of ITC, again, we need to go only to section 18. Wherein
Yes.
it says that the transfer of liabilities are also required.
See, that's why I brought in para 4, because in that case, the only condition is going concern. But when they inserted 18.3, they inserted specifically that liabilities have to be transferred and a certificate from a chartered accountant has to be taken.
Correct.
So in that case, when they have specifically inserted the condition, in that case, entire liabilities have to be transferred. We cannot pick and choose between liabilities.
Yes, exactly, sir.
Just one question. They are saying transfer of liabilities. They are not saying transfer of all liabilities. So it is a commercial understanding between the two parties, how much they want to take up, because ultimately a business understanding would be there when they transfer and consideration would be determined. So the contracting parties may decide that they don't want to take up certain liabilities, and accordingly may end up paying higher consideration. But I'm not saying that liabilities are not transferred entirely. Some liabilities are transferred. Still, 18.3 can be applicable to my mind.
But in that case, Rule 41 Sub-Rule 2, which provide that transferor shall submit a copy of certificate from issuing a practicing chartered accountant, cost accountant, certifying that a sale, merger, demerger, amalgamation, lease, or transfer of business has been done with a specific provision of transfer of liabilities. So in that case, if the option would have been to pick and choose, then in that case, the certificate from chartered accountant would not have been required. They could have just provided that whatever liabilities you have and want to take, you can take.
Sir, in my view, also, if it is a particular business and let us suppose you have drafted a financial statement for that particular business, then that particular financial statement's assets and liabilities total has to be transferred. So if you say that there is a head office and there is a branch office, you keep all your financials loan in the head office, and in the branch office balance sheet, that loan may not come, and that branch office may be directly transferred. That may come under section 18.3. But if in a single balance sheet you are having also a loan and creditors, then the whole liabilities has to be transferred.
Vishal bhai,
Yes,
I
Akash
have a
bhai.
query that if there is a demerger, right, and there is no liability in the business which we are transferring, then will that tantamount to transfer of liabilities?
Pardon?
There are only assets in the business.
Yes.
And we are transferring that business. There are no liabilities per se.
Sir, but when you draft the takeover agreement or a sale agreement, you will be drafting as if all the assets and liabilities of the business are transferred. In your case, in your balance sheet itself, there is no liabilities. It is only your capital which is representing all the assets. Therefore, still it will be treated as takeover only, transfer only.
So what you concluded that there should be an agreement which speaks about provision for transfer of liabilities. So when there are multiple liabilities in any business and there is an agreement which is identifying that these are the particular liabilities which are related to the business, then even if all the liabilities are not transferred and some of the liabilities are transferred, then this provision is satisfied.
Sir,
I would like to add here one thing, sir, to what Akash said, that whenever you're transferring assets, if there are any liabilities which are related to those assets, then they needs to be definitely transferred. You cannot pick and choose that you will transfer an asset and not the liability attached to that asset. So as far as all the liabilities attached to an asset are getting transferred, I think the scheme will still hold good.
Sir, liabilities attached to assets will also include financial liabilities, sir. Because if let us suppose you have taken any overdraft limit or you are taking any loan limit for the purpose of machinery, then all those are linked to assets only, sir. Anyways, when you prepare a balance sheet,
those machinery should get, if the machinery is getting transferred, the OD or the CC should also get transferred. That is my submission. You cannot choose that the OD will not get transferred.
Correct. I hope so. Shall we proceed next?
Just one small point, Vishal. With respect to transfer of liabilities, they have never used the word all, which was already discussed by Amit. I would read in a slightly in a different context. Liability, I will read in the context of the GST liabilities. So I will make us ensure that the provision and transfer of all GST liabilities are getting transferred. Some of the liabilities is the business call which may be retained, and the law and rule does not specifically provide for all the purpose. All liabilities, specific provision for transfer of liabilities has been used. So I will read in that context. We can proceed. Thank you.
Yes, sir.
And
sir, my view is still the same only, sir, because section 18.3 along with rule 41 also, I think so 41 subclause 2, wherein it says that there should be a specific provision for transfer of liabilities, and this liabilities is spoken on account of business, not on account of GST, sir, because the sale is of business, the takeover or amalgamation or merger is of business, and the liabilities also should be read in conjunction with the first line. Therefore, the liabilities are also in relation to the business. So it may be financial liabilities, it may be a trade liability. All the liabilities of that business are being spoken about is only my view. Maybe other respected speakers can put some light.
Just one more small point to highlight. Rule 41, if we see the first explanation, it says that it clarifies the meaning of value of assets. There it is saying value of entire assets of the business. Similar clarification is not there for value of liabilities. Maybe if that can be another point to defend my argument.
Okay. Sir, is there any
I
case
just
laws?
would like to add, okay, when we say transfer of business, as somebody pointed out earlier, it cannot be a pick and choose. It has to be in whole. Like, there is a proven case law in NCLT case, there is I will just share it in the group, some Z Entertainment, where they specifically, creditors specifically opposed to that, exclusion of liability is prohibited. In fact, the case was held in favor of the petitioner. So when you say business, transfer of business, it includes the liabilities also. That means transfer of business includes assets and liabilities in totality. That's my view.
Thank you, madam. So maybe we are having a little two-way opinions. Few of them are saying that the transfer of liabilities should be all the liabilities, and few feel that the word transfer of all liabilities is not mentioned in section 18.3. But still, I will read it as all liabilities in connection to the business.
Vishalji, if anyone can summarize the counter view.
Yeah.
Yes, Dileshji. Yes,
Yeah.
anyone.
I can summarize the counter view. The counter view is that when there is a transfer of business as a going concern, there could be a possibility wherein the parties to the agreement decide that they transfer the assets and liabilities which are necessary to make the business as a going concern. The certain liabilities may be retained back by the transferor, and I'm not saying all the liabilities, but certain liabilities could be retained, and in that case also 18.3 becomes applicable. And to support this, the word all is not there in 18.3, and neither it is there in rule 41 subclause 2. And also the explanation, first explanation in rule 41, it gives a clarification about what do we mean by assets, value of assets. So there they are saying all the assets, whether or not credit is taken, but they are not giving similar explanation for liabilities, that it should contain all liabilities. I'm saying even if key liabilities are there, 18.3 should get satisfied.
Sir, your good name, sir?
My name is Amit Agarwal.
Amit ji, just for a discussion. So let us suppose there is a company which is having a loan from a financial institution, maybe. Let us suppose for 10 crores. And in the takeover, you say that you don't want to take over this 10 crores of loan and you are taking over other assets. But this loan would have given only for the purpose of business. Maybe it is a business loan, unsecured business loan. अब जब टेक ओवर में अगर आप ये बिजनेस लोन नहीं लोगे और ट्रांसफरर के पास अगर कुछ बचेगा ही नहीं और 2 साल के बाद वो बैंकरप्सी डिक्लेयर कर देगा तो 10 करोड़ का लोन तो ऐसे चले जाएगा ना, बिकॉज द लोन वाज इनिशियली सैंक्शनड फॉर द बिजनेस, नाउ यू हैव सोल्ड दैट बिजनेस, सो नाउ हु विल रीपे द लोन, मतलब जस्ट ऑन अ हाइपोथेटिकल सिनेरियो.
So generally these the kind of transaction I am talking about we will see in a group company scenario where there is a holding co and subsidiary co and everybody is related, and they just want to not load the new subsidiary or the demerged entity with too much of liabilities. There is a possibility to have these kind of arrangements. But yes, in a third party kind of a normal commercial transaction, what you say is right. The entire loan also will get transferred because the business related to that loan is also getting transferred.
Sir, no, you are itself
Vishalji, let's have two opinions on this and let's try to move forward.
Sure.
Point, Vishal.
So
The
now,
question which you have raised on the asset, typically the banker typically have their mortgage and everything on the assets. So they cannot do the transfer unless and until they get a consent from the banker.
Correct.
Coming
All
back
the
to what
creditors,
kind of
loan creditors
liabilities
and
typically retained by the these guys are related to the employee's liability or something like that, which they don't want to take this forward to the new company.
Okay, we'll just take it forward with these two opinions. So there is a rule 41 which says that the registered transferor shall file ITC02 form and transfer the unutilized ITC in the electronic credit ledger which is available to him. This is in case of sale, transfer, and takeover or amalgamation. Now, in case of demerger, what happens is a particular part of assets is being transferred to the new company. Therefore, whatever is the proportionate ITC in relation to the assets which has been transferred in case of demerger, only that particular ITC has to be transferred to the new entity, and for which a CA certificate is required. CA or a cost accountant certificate is required, which needs to be submitted along with this form ITC02. And what can be transferred is the input and the input of capital goods, input of goods and input of capital goods that can be transferred to the new entity. This is the procedure part. Now we will come into, okay, we'll come into rule 41A later. We'll just come into some queries. Now, let us suppose there is a takeover of business. Whether if there is any takeover or sale or a demerger, should I mandatorily transfer ITC to the new entity or is it an optional? So A Limited is been demerged into A Limited and B Limited. And let us suppose 50% of the assets are being transferred to the B Limited. Now A Limited is having an accumulated ITC of 10 lakh rupees. So whether in this 10 lakhs, some portion has to be apportioned to the B Limited, whether it is mandatory or not. Anyone who can actually?
I believe not mandatory.
Okay. Because the section 18.3 uses the word shall be allowed. The transferor shall be allowed to transfer ITC. But if you see rule, that is not ITC 03, it is ITC 02. There is a mistake in the presentation. So ITC 02, it says the word shall. The section says shall be allowed. Rule says shall.
But it's essentially speaking about a benefit, right?
Correct. So benefit has to be, if I want to exercise the benefit, I can exercise, else it's not required. This is
precisely. Yes, my view also.
Yes. In case of this Ticona Infinite, I think so this is not relevant now, because what happened is at that time ITC 02 form was not available online. Therefore, they transferred this ITC, this input tax through 3B. One particular entity reduced the ITC from 3B, and the recipient entity added the ITC amount in 3B, and the transfer happened in GST at 3B. Therefore, in this particular case, the Allahabad High Court said that since ITC 02 is not available on the portal, there was no mechanism to transfer. Therefore, the 3B transfer also can be treated as if the section has been done away with. This section 18.3 has been complied with. So this is one case. Now here, the benefit is there under section 18.3 to the taxpayer, stating that whether they can transfer, if they want to transfer, then the rule takes place. Rule takes place on basis of how much is the proportion of assets which has been transferred. Based on that, you need to transfer the ITC. Therefore, in my view also, section 18.3 is only beneficial provision. If you want to use that provision, you can use it to transfer the ITC. Any other counter view on this?
Good morning, sir. Sir, my view is that I think it should be considered from the point of view of the transferor. No, whether the department will allow him to use that ITC also, that will be it, because all the assets have been transferred. So when assets, we have transferred the assets, if there was some ITC related to those assets, I think then it problem may be to the transferor, sir. That's my view.
So you mean to say that if ITC 03 is not filed, then the transferor may get a notice from the department to reverse that ITC?
That will be sure, sir. That will be sure. Department will not leave that, because they will say that no, you have transferred those assets, and whatsoever ITC is accumulated here, that should not be used by you. That may be a problem, sir.
But nowhere in the law it matches the input with the output, sir.
But sir, I think there is a law that when we transfer some asset, then we have to reverse the proportionately, I think. Okay. that is also there, sir. That's I think that is not overridden. That section, sir.
Sir, just one point from my side, probably can clarify. Now, how does this entire position that it is a benefit, I don't have to transfer the credit, fit in with the exemption given for transfer of business as a going concern? Are we required to reverse based on a proportion exempted supply?
So now
If
here
it is-
again, RPG's discussion will come into play. So first of all, whether you are taking this transfer as Schedule 2 item, transfer of business, which is neither a supply of goods nor a supply of service. So if it is neither a supply of goods nor a supply of service, then it cannot be a exempted supply as there in the notification 12/2017.
Correct.
But business definition includes service in connection to commencement and closure of business.
Okay.
To be true, if you ask my view, Schedule 2 will have a more impact wherein it will neither be treated as supply of goods nor supply of service. Therefore, in my view, it is not a supply. This takeover of business is not a supply. Once it is not a supply, there is no 17(2) reversal also. Taxable supply, exempt supply, Rule 42.
Okay.
This is my view. Anyone else who has a view that this takeover of business is an exempt supply as per notification?
No, I think once the business is transferred as a going concern, then we cannot say that individually the assets have been transferred. So the transfer of individual asset and resultant ITC reversal clause doesn't apply in case of a business transfer, to my mind. And on this optional part of section 18(3), there is one tribunal judgment under SENVAT credit rules, Rule 10. I don't recollect the citation, I'll just send it across later, where similarly placed Rule 10, they had said it is optional to transfer the credit on business transfer. So that also can be leveraged for GST purposes.
Thank you, sir.
Vishalji, how I see this, that when there is a transfer of business through sale, merger, demerger, amalgamation, lease or transfer, if ITC is part of the assets by which has been transferred, then ITC 02 has to be filed.
Mandatory.
Yes, because supposedly I am considering what are the assets to be transferred. So I take fixed assets, I take current assets, cash and stock, and then I come to credit, and both the companies decide that this is the credit which is there for the business to be this is the credit to be taken to the new business. Then to that extent, ITC 02 has to be filed. But if they have decided that this ITC is not to be taken and the ITC still remains in the old business, then ITC 02 cannot be filed because that asset has not become the part of the new business.
Well taken, sir. So you mean to say that if in a balance sheet which has been taken over and that contains unutilized credit in the current assets, which is also been taken over by the transferee, then that amount has to be transferred in ITC 02.
Yes.
Yes. Well taken, sir. Well taken. So if the GST credit is also forming part of the assets which has been taken over by the new company, then the ITC 02 has to be mandatorily done, because the transfer has been done, and for that you have received on consideration also.
Yes.
So now we'll just, the third question is whether sale or transfer is supply of service or not. We have already spoken on this. So if you go by Schedule 2, then it is not a transfer as a going concern. But if you don't do a takeover as a going concern, and here if you have some deviation that only specific assets and specific liabilities are being taken over, then I feel that the going concern will be failed. Once the going concern is failed, then you may come into this taxability or exemption and all. Yes, shall we proceed?
Yes, Vishalji.
Yes, we'll have just two case studies on this section 18(3). A company XYZ, one second. I just need to move this. Yeah. A company XYZ is registered in
I have a
small
query. Vishalji, what will be happen if my books of accounts and the ledgers on the portal is not matching in relation to GST? When there is a taken over or the merger or the acquisition is taken off. So my portal is saying something because there are number of running ledgers as well as number of credit ledgers and cash ledger. and which is not matching with my books of accounts, and that books of accounts has been taken over, or the demerger or the acquisition is happening.
So we'll just take a practical case, sir. In your books of account, you say that you have a credit of 10 lakh rupees, but in your electronic credit ledger, you have only 8 lakhs.
Right.
So now the section says that unutilized ITC available in the electronic credit ledger.
So I have to take all the asset, all the liabilities, at least GST liabilities I need to take over.
Pardon?
In a takeover process, at least GST liabilities, even though I am picking all liabilities or taking all the liabilities, that is aside, but at least GST liability I need to take over. That is of 10 lakh, and at portal I am taking 8 lakh. So how it can be done?
So, but the transfer can be done only for the credit which is available to you, no, sir. As on today in your books it is 10 lakh, sir. But अगर आप 3B फाइल करने जाओगे तो 8 लाख से यूज करने देगा ना.
हाँ, आनंद जी आपके आउटपुट टैक्स के बारे में बोल रहे हैं या आईटीसी के बारे में?
ITC. See,
ITC अगर
can I restrict my takeover liability of 8 lakhs in the merger procedure, which is available on portal?
Yeah.
So what 2 lakhs I will keep.
So
that's why if you see the illustration in Circular 133, regarding demerger, where it's told as to how on the basis of assets, like the ITC can be distributed in case of demerger. They were in the illustration also they have shared as to what is the ITC available in the electronic credit ledger for the respective states. So it is gone like that. So there also the understanding is, as Vishalji was sharing, only the credit in the electronic credit ledger can be transferred, even if your book balance is higher.
Arupji, the question is, let's take an example that for 2021 and 21-22, I have availed the credit as per books of accounts.
Right.
I have availed the credit as per books of accounts. Now, in 3B, the supported department now creates a liability against me. I have opted for appeal, and there might be a situation wherein my credit in my books of accounts would be higher and the credit in my credit ledger would be lower.
Yes.
Absolutely.
Now, in that case, the query is how the ITC would be transferred. In my opinion, Rule 41 only speaks about the credit which is available in the credit ledger. But beyond that, if the credit is available in the books of accounts, then again we have to go as per the agreement which has been executed for transfer, that whether the excess credit which is there in the books of account has been taken over by the new company, because in that case, whatever litigation is being taken place, that also has to be seen that who will take over that litigation. Whether the old company would be retaining that litigation, in that case ITC would also be there, and in case the new company would be taking over the litigation, then ITC would also be there. But in that case, that ITC would not be through Rule 41, it would be through the agreement only.
No, but here again, RPG, there is a technical challenge, like again the portal challenge, which is I cannot transfer more than the balance in my electronic credit ledger.
There is another one query, sir. Whether can we file ITC 02 twice? So in his example, the first ITC 02 will be filed for the available balance of 8 lakhs. And whenever he wins the case and again 2 lakhs gets credited to the electronic credit ledger, he can transfer the 2 lakhs. So whether ITC 02 can be filed twice.
So I have not seen any restriction, because we had a similar matter. I have not seen any restriction in the law. Okay.
Right. We can file ITC 02 twice, or more than one. More than one time we can file ITC 02.
Yeah, I have not seen any restriction in the law regarding this.
Anand, in your query also, the first ITC 02 can be filed only to the extent available in the electronic credit ledger, sir. Maybe on a future date when you are able to match your books and the credit ledger and you get that credit, maybe वो credit block किया हुआ रहेगा because of bill trading issue, और वो credit आके appeal के लिए utilize हो गया होगा. So any which situation, then a second ITC 02 only has to be filed, sir. But on the initial stage, it cannot be transferred. Means if you have 8 lakhs credit, you cannot transfer 10 lakhs, sir.
Right. But there is a restriction to file ITC 02 within 30 days.
Pardon?
There is also a restriction to file ITC 02 within 30 days of the transaction, of the transfer or acquisition. ITC 02 has to file within 30 days.
There is no such restriction. There is no such restriction of filing in 30 days. It is in Rule 41A. It is not there in Rule 41.
Yeah, restriction of 30 days is not there in the law.
Correct, sir.
Okay. Has anybody actually tried filing to ITC? That was my question.
Yes, yeah, we have tried. We have tried.
You can multiple ITC 02.
Okay, okay, good.
So it so happens that even after you do the transfer, some of the vendors have not been informed. The credit is now still coming to the old entity.
Okay.
So in this ITC 02, whenever a transfer happens from the transferor end, the transferee also has to accept it.
Right.
Only once he accepts, it gets credited to the electronic credit ledger of the transferee.
Correct.
So we'll just move forward with this particular case study. A company XYZ is registered in 2 states, MP and UP. Its total value of assets is worth 100 crores, while its assets in state MP is 60 crores and UP is 40 crores. It demerged a part of its business to company ABC. As part of such demerger, assets of XYZ amounting to 30 crores transferred to company ABC from Madhya Pradesh and 10 crores transferred from Uttar Pradesh. So total transfer has happened to the extent of 40 crores. But this 40 crores has multiple location. 30 crores is in MP and 10 crores is in UP. Now, how the transfer of ITC has to be taken care? Because this sale of business will be one particular agreement between the company to company. But then in that agreement, the assets return will be 30 crores of the MP, maybe a particular plant in MP which is worth 30 crores, and one plant in UP which is worth crores. Now, how ITC 02 is to be filed? Anyone who wishes?
So that's what I was saying. As per Circular 133, which is guided 133, and by the rules of the Rule 41, it says that on the basis of the proportion of the assets that are being transferred.
Correct. So no, but even then we see that agreement will be made only by the head office in the MP to, let us suppose, a person who is also in MP. But then still, if there is any ITC of 2 different states, then the ITC transfer also has to be taken care in 2 different states. So in MP also, we need to transfer the corresponding ITC, which is in relation to 30 crores. And in UP, we have to transfer the ITC in relation to 10 crores. And when we divide it between the total assets, because in case of a demerger or this takeover, so the division has to happen between, the proportion has to happen between the takeover assets and the total assets. Now, total assets, whether you will be taking all over India assets or you will be taking only the state related asset. So this circular also clarified that the state related assets only has to be taken care. So in our example, in Madhya Pradesh, the takeover asset is 30 crores. The total asset is 60 crores. So 30 by 60, which will be 50%. So 50% of the ITC needs to be transferred from the electronic credit ledger of the MP to the transferee, who will also get registered in MP. And in case of Uttar Pradesh, only 10 crores has been transferred out of 40 crores. 10 crores is transferred out of the total asset of 40 crores. Therefore, only 25% of the ITC will be transferred in the state of UP to a new registration in UP only. It cannot be to a new registration in UP because the plant is situated there. I hope so this particular case study is clear.
Vishal, I have a modification to this case study, Hanish here. So if there is a company which has 2 divisions, okay, and division 2 divisions, has 2 divisions, not more than, it has 2 divisions. Okay, Division A and Division B. Division A has net book value of asset of 60 crores and Division B has net asset book value of 40 crores.
Okay.
Okay. The unutilized input tax credit, assuming, is 1 crore of rupees. Now, Division A is being sold to another company, but I know for a fact this entire credit which I have, unutilized credit, relates to company A on, Division A only, and nothing is relating to Division B. So with invoices I have, because I have been availing the credit, not utilizing the credit. Now, is there an option of me transferring the entire credit because I know that the credit relates to only Division A, or the assets which are being transferred relating to Division A?
Sir, when we go to the rule says that the proportionate ITC for the assets transferred has to be transferred in ITC 02. So in your case, you say that you have maintained a credit ledger wherein it says that only the Division A ITC is there in the electronic credit ledger. But isn't it very difficult to find out which ITC is being utilized and which ITC is not utilized?
See, but I'll tell you, maybe say we'll take example of Safari itself. So I had division A was commercial construction. Okay. So I have availed and not utilized the credit. But division B is a profit, meaning I'm earning good amount of profit. So jitna bhi credit aa raha hai, I'm able to utilize it. And balance I'm paying by cash. So entire thing relates to division A only. And that commercial asset I'm transferring it to another company.
So in your every return filing also, you restrict the utilization of ITC and the balance amount you pay by cash. You don't utilize the full ITC.
Correct. उसमें थोड़ा CSI का थोड़ा issue होता है, but I'm ensuring that I'm maintaining that much balance and not utilizing that.
So, but nowhere in the law it says that, you know, individual asset-wise ITC or individual purchase-wise ITC which is held in stock is being maintained. Therefore, to actually break the electronic credit ledger is little difficult, sir. The practical challenges to आएंगे, but let us speak on the law perspective. I still feel the words. It talks about only proportionate credit, sir, to
No,
the
but
transferred assets.
I had one question to Anish ji. Here, both the divisions are transferred together or they are transferred in a silo separately?
No, only one division is transferred.
only
which
one
is that
division
commercial construction. Yeah. Only commercial construction wala transfer kar raha hu, which I'm holding it for rent. For further renting once the construction is complete.
Okay, so it is that division. So here, the role of the chartered accountant will become very important. Who is giving the right certificate for the ITC 02? So he has to determine as to which could be the ITC, which could be identifiable or allocable to the commercial construction business.
विशाल जी, ये जो proportionate को थोड़ा करोगे clarify proportionate कैसे proportionate to assets को proportionate को आप करोगे explain how to proportionate? There may be 100 of assets. There may be certain assets which are exempted. There was no ITC. There will be other which have having ITC. So how to get it proportionate, sir? Please.
So we only take on the total assets value, the net asset value. In example of Anish ji, wherein he said that net asset value of the takeover business is 60 crores and the net asset value remaining is 40 crores. So proportionate will be 60-40.
It is proportionate to the total value. Nothing doing whether ITC was well done, those sets are not. That will not be there. Okay, thank you.
No, I didn't get you. Yes, sir.
I just wanted to know that if in the block of assets there are certain sets where no ITC was applicable, there was no ITC at all.
Land,
like building, land, and anything else. So are those to be taken into account, sir? Please.
Sir, it talks about only total assets, sir.
It means
in fact, if we go with the circular, it even talks about debtors also. Debtors, everything has to be taken into account.
Okay. All these sets. All these sets. Okay. Thank you.
Sir, in my view, it is total asset value, sir. Whether on some assets, whether you have claimed ITC or not, when the takeover happens, what is the total asset value which has been taken over has to be compared with the balance asset value, and based on that ITC has to be transferred. But in Anish sir's case, I think so it is a peculiar case wherein, you know, he was waiting for the Safari Retreat judgment and he claimed the ITC on the commercial property.
Even now I am waiting for the clarification.
Pardon?
After judgment also I am waiting for clarification.
Now the wait will be even longer.
So today evening 5 o'clock you will get a clear picture, sir. Arun Das has shared the link.
Yes.
Right.
So maybe today evening we can take that discussion, but still Anish ji, little conservative view, it is very difficult, sir, to transfer the whole credit.
Vishalji, in my opinion, somewhere down the line, the law has clearly provided that this is the condition by which the ITC can be transferred in case of demerger. So while drafting the agreement, this condition has to be taken care. If we are going beyond this, then we are somewhere down the line challenging the law, the wires of the law, that how they can go beyond my agreement when I am transferring the entire asset. The ITC has to be transferred and you are giving me a new rule wherein you are bringing the value of asset. So this is going beyond my agreement. So in case of Anish, somewhere down the line, the rule needs to be challenged. Otherwise, the rule is pretty clear that the proportionate asset has to be transferred. And if we see out of all the cases of sale,
your first argument can also be taken care that in a takeover agreement, the asset of 100 crores of credit is been there. Therefore, that 1 crore rupees credit is been taken over by the new company. Therefore, the total 1 crore is been transferred.
Yes, and if we see the rule, out of sale, merger, amalgamation, lease, and transfer, and change in ownership, they have only provided for demerger.
Correct.
For proportionate. So there is a specific insertion in the law for demerger cases. And if we are going to transfer the credit beyond the proportionate value, then somewhere down the line, law has to be challenged, and that can be challenged.
Yes. Maybe we'll just move forward.
It's
Vishal,
9:57.
just 2 minutes
Just a
more
reminder.
because
Sorry. I
because
just
we
time
have-
check 9:57.
yes. So we will continue in the next session, the leftover part.
No, I didn't get you.
नहीं आपका कितना देर बाकी है इसमें? This is only this
और एक
case
10
study,
मिनट
no?
है सर, that's all.
So should we complete by 10:05?
Yes, Arup.
चलो.
Now,
ठीक है.
this
विशाल
section 18.3, this we will take just this case study. There is ITC balance of the transferor X in the state of Maharashtra and the CGST, SGST, IGST of 5 lakhs, 6 lakhs, and 9 lakhs respectively. And pursuant to a scheme of demerger, X has transferred 60% of the asset. Now the total ITC is 20 lakhs. So now whether should I calculate 60% of 20 lakhs or 60% of 5 lakhs, 60% of 6 lakhs, and 60% of 9 lakhs? This is the query. So whether the transfer has to be done individually headwise, or whether the calculation can be total and the transfer can be any ITC. So circular 133 gives this clarification stating that the calculation has to be done on a total basis only. So therefore, total ITC 20 lakhs into 60% is 12 lakhs. In this 12 lakhs, I can transfer full IGST of 9 lakhs and balance CGST, SGST of 1.5 and 1.5 also. So still I will have a total of 12 lakhs. So no need to calculate 60% of the individual credit ledger, individual CGST ledger or SGST ledger. It can be taken care as total. So I'll just move with this rule 41A once, so that section 18.3 is completed. Rule 41A talks about business verticals. So let us suppose there was a particular company who is having a business in Chennai and Coimbatore in one GST registration. Now he feels that he wants to separate that Coimbatore division to a new registered person. So he will take a new registration in that Coimbatore for the Coimbatore factory. In this particular case, what happens is the constitution is same. The proprietor becomes only the proprietor only, or the private limited is a private limited only. It is just that they are having two GST number in a one state. Now what happens is if they want to transfer any ITC to the new entity, then the form is ITC 02A, which can be used, and the proportionate ITC in relation to the assets which has been taken care by the new registration has to be transferred in this form ITC 02A. I think so. Section 18.3 is been completed. We need to go into section 18.4. Arup ji, I think so. Yeah, section 18.4 bada nahi hai. Maximum 10 minutes.
We will take it in the next session.
Okay.
And Arup ji, 18.1, 18.2 is part of 18.1 and 18.2 is also left for the previous speaker. So we will take a joint session in the next session.
ठीक है. Let's do that. So over to Venuji for the vote of thanks. Venuji. Yeah. I think Venuji is driving. Yeah. Okay. So I think
I will make the
Yes, sir.
no problem.
Yes,
Sir,
please,
it was a very nice session. Thank you, Vishal sir. Thank you, Vishal ji.
Thank you, sir.
You for
Thank you.
enlightening us on this provision.
Thank you,
Okay,
sir.
on behalf of the entire team, I am thanking you, Vishal ji.
Sir, thank you,
Okay.
sir. I would
Thank you.
apologize for the initial 5 minutes.
No, it is not an issue. It is a content and everything was nice. On behalf of Venuji, I am thanking all of you for this session. Thank
Sir,
you.
thank you,
guys.
sir. Thank you.
Thank you, both. Thank you very much.
Thank you.
So
Thank
wish
you.
everyone happy Navratri. Let's have a wonderful time ahead, and we'll meet again next week, next Saturday.
Sure, sir. Thank you. Thanks a lot. Happy Navratri.
Yeah. Bye, everyone.
Bye.
Bye.